Hey everybody, Chuck Barone. It is Tuesday, September the 12th, 2023. A day for a little bit of a breather before all the crazy starts up in full tomorrow with CPI and a whole bunch of data coming in. We can expect things to be, I would guess, a little more exciting than they've been the last couple of days. Market kind of just holding its breath, waiting for data. It's completely data driven now. Anyway, before I get rambling on the markets, let me welcome everybody to the show. And as always, thank you guys for your support. You guys coming here every day watching these videos, being with us, asking questions, hitting us up in comments. It all means the world to us, guys. We appreciate your support. All right, so let's look at these markets today. We know today was the breather day. Tomorrow we'll get a ton of data, start before the market even opens. So today the market's kind of the markets were down, but in a meaningless kind of way. The Dow down 17 points, sitting at 34,645. The S&P down 25 points, 4,461. The NASDAQ down 144 points, 13,773 for the NASDAQ. So the markets were down, but nothing dramatic. They're kind of moving sideways up and down a little bit until they can kind of find some kind of direction, which they're having a very difficult time doing, obviously. The bond market today kind of mixed. You have the 10-year falling 3 basis points, so people buying the 10-year. The yield there falling to 4.26%. And the 2-year actually jumping 2 basis points, now back up over 5.02%. So people buying 10-year, selling 2-year. I don't know what that really means in the market. They really believe longer-term rates are going to go up faster than short-term rates. That's not what the inversion tells us, right? Anyway, so here we sit with a weird bond market still getting weirder, but at least the volatility is settling down this week. The dollar today up very small, but still solid, sitting at 104.73 on the dollar index. It's in pretty good shape. It was inching up higher toward 10. Actually was up over 105, but still sitting at a very strong number. The dollar king of the hill right now, compared to all the other currencies in that basket. Metals, mixed day today. Kind of a weird day with metals, with gold falling $9.30, $1,912.50 for an ounce of gold. At the same time, silver, small rally, up 2 cents, but better than a down day, $23.07 for an ounce of silver. That strong dollar obviously putting pressure on gold and silver, and while the dollar remains strong, it's going to be tough for gold and silver to make any kind of new highs. Oil, though, on the other hand, still higher again today, up another $1.60, $88.89 for a barrel of West Texas Intermediate, a number that's surprising the hell out of me, guys. I really thought that this was kind of a spike, but there's in my mind, no real wow factor behind this. So the Saudis agreed to keep their cuts, so did Russia. Okay. Is that really what's spurring this? They already had these cuts last month. Didn't see a spike. You see a demand spike coming anywhere in oil? Well, maybe with the winter coming, but I just don't see it, especially after the year the Europeans had last year. They're stocking up. So we'll see if oil can sustain these prices, much to the glee of most of our enemies. But, the truth is, as we've talked about in this show, might be a surprise to a lot of people. The number one oil producer in the world right now is us, the US of A. So these high oil prices certainly helping out American multinationals, yay Exxon. Bitcoin today jumps, wow, up $993. Nice move for Bitcoin today, $26,075 for Bitcoin. A good solid number. Bitcoin holding its own, man. Say what you will, guys, but I guess the trend seems to be down because it was up over 30,000. But for something a lot of people think is a hoax, it's certainly holding value. So we'll see. Interesting stuff with Bitcoin. All right, so let's talk about news today. This was interesting. I was reading this Bloomberg survey, and apparently this survey shows that the U.S. consumer, us, is pretty much running out of rope on this buying spree, seeing consumer spending jumping like crazy every month when the report comes out. The Bloomberg survey, however, paints a pretty negative picture. This survey says 50% of the people surveyed, I guess it was around 3,000 people in this survey, 50%, more than 50%, said that personal consumption in the United States will shrink in the first quarter of 2024. Almost 25% of the people polled said it would shrink this year, even with the GDP Now tracker showing pretty amazing growth in the third quarter. Apparently, people figuring that consumers are going to fall off a cliff somewhere. I don't know, guys. I think that the people like myself who tend to be a little more conservative with their money are having no problem spending less money. But I think other people who are maybe less conservative with their money are spending it like they got to get rid of it. And they're going into debt to continue spending this stuff, to buying crap they don't need. Now, of course, the inflation numbers making a big difference in everybody's life. I mean, if it costs you 10% more, because let's say, they're talking about inflation at 3.6% tomorrow, we'll see. But even still, over the course since this inflation started, prices are higher. Prices are a lot higher. So this perfect scenario they're talking about for this soft landing, picture the Hindenburg. They're talking about, this is great, guys, falling inflation. Well, inflation didn't fall last month. Inflation is not expected to fall this month, but they're pointing to that as something that's good. The end to the Fed tightening cycle. Really? Who said? I don't think it's over. Peak interest rates. Again, who said? I don't think it's over. This is what the market's betting now. They're talking about a stable dollar. Well, the dollar's been holding its own pretty good. Solid employment numbers. I thought the Fed hated that. Stable oil prices. Well, they were for a while, but certainly not over the past month or so. So this is what they're pointing at to give this pitch of a soft landing coming. Well, I just say, okay, sure. Let's just ignore some stuff here. Let's ignore record levels of debt for consumers. Let's ignore the very real effects of inflation. Because the bottom line is, guys, okay, it's a new world out there. These prices that have come up so much over the past couple of years, they're not going down again. They're just not going to go up as much. Now you see a deflation coming? So now we're talking $2,000 plus rent mortgage payments is the new norm. $7,000, $8,000, $9,000, $1,000 car payments. The new norm. $8,000 to $10,000 average credit card debt per consumer. The new norm. Guys, student loans. Out the yin yang, gonna have to start paying those loans back. Incredible housing prices. People can't afford to buy a house. They can't afford to rent a house. Impossible mortgages. First-time home buyers being confronted with $2,500 a month, $2,500 a month mortgage payments. I tell you guys, and you've heard me talk about this before, this debt slavery, this slavery to payments, this treadmill they want everybody on, where all you do is work. You work your butt off to get paid. And then as soon as you get paid, you start paying bills. And by the time you're done paying bills, you got peanuts to live on. But all the corporations got their money. Guys, be careful with this debt stuff, man. They want everybody on a payment treadmill where basically you exist just to make payments. Whether it's student loans or cars or cell phones or, internet, it's incredible the amount of stuff we have to pay just to function and have a normal life. But be careful going into deep debt, guys. It's really hard to get out of debt. Super easy to get in, right? Borrowing money's fun. Spending money's fun. Paying money back kind of sucks. So be very, 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 very careful, guys. As you know, we're going to get CPI tomorrow. It's a huge day. It's going to be huge, man. If the number comes in where they're suggesting 3.6%, that will be this. Now it's jumping a little higher. Last month it was from 3 to 3.2, so 0.2%. If it goes to 3.6, now it's 0.4% in a month. Inflation moving the wrong way. But this Goldilocks scenario, this perfect scenario that everybody thinks is just going to happen, I tell you guys, where on earth does that ever happen? Where does it all work out where everything just goes perfectly? Pretty rare stuff. Pretty rare. So I got to see how they're going to pull this off, man. And bottom line is, even if everything still goes perfectly, and we avoid a recession, the consumer is still going to be saddled with record levels of debt. Credit cards companies real busy raising everybody's limits. Did you guys get an increase in your credit card limit? Usually when a recession's coming, the opposite happens. Banks will start cutting people's limits. Well, right now, they want to keep the party going, so they're increasing people's limits. And what are the people doing? Charging those limits right up. Guys, beware the debt trap. Once you're in it, it's so hard to get out, man. And your life will be so much different and so much better without debt. Be very cautious. All right, so let's talk about one last thing before we jump. Poverty rates in the United States jumping by the fastest rate in more than 50 years. So now we're going all the way back to the 70s kind of poverty rates here. Child poverty rate doubles from 2021. Roughly 15.3 million more people in the U.S. now living in poverty at the end of 2022. The largest increase in poverty, the amount of people living in poverty in over 50 years. The poverty rate in the U.S. jumps to 12.4%, up from 7.8%. And child poverty jumped from 5.2% to 12.4%. Now, the child poverty thing, we know they were given that child tax credit, took it away. You can see the difference here. Not suggesting they need to put it back. I'm just saying that is the big bulk of this child poverty number here. But even with jobs, as robust as they are, wage gains that we're hearing about, median household income fell last year, fell 2.3%, with median household in the U.S., median household income now sitting at $74,580. That's median household. So that's typically two people working, right? That's at the end of 2022. Now, it doesn't matter what they tell you guys. Wages might be going up, but they're not going up as fast as inflation is. People are falling further and further behind. The people that are expecting to carry this economy falling further and further behind. Now they're going to stack on student loans, higher payments on everything as rates continue to rise. Not a picture, not a scenario that's going to create a happy ending. It just isn't. But anyway, don't let me be Charlie negative. That's all we got for the day, guys. Tomorrow will be a massive day, and we will be here to bring you guys all the gory details. As always, we appreciate your support. You guys mean the world to us here. Keep on coming with your comments, questions. P.S. If you like what you're hearing, please hit the like button. It changes the algorithms around, helps us get our videos out in front of more people. We'll be back tomorrow to bring you the news you need, guys. By the way, broken-hearted Bills game last night, man. Sad night. Anyway, tomorrow's another day, a brighter day. Until then, guys, take care. Thanks.